Hi, welcome to the Jesus Before Money podcast. My name is Corey, and welcome to the first edition of the money portion of the Jesus Before Money podcast. Today, we're going to go through five broad things in the world. I was going to call it the stock market, but it's really the world. First, we're going to talk about the SPX. It's on the screen. This is the S&P 500. And we're going to talk about Bitcoin, U.S. oil, the 10-year yield, and gold. And my goal is after I'm done here, just with these five things, you could get a broad perspective of where we're at and what might be coming, and how to maybe protect yourself financially and to make better decisions. Now, none of this is financial advice. This is all for entertainment purposes, so do with this as you wish. Okay? To begin, this is the S&P 500 index, the SPX, okay? This is a logarithmic scale to account for the exponential increase in the money supply. This trend line, this parallel channel, which if you don't know what a parallel channel is, parallel channels are a phenomenon that we find in the charts, and they give us a high and low range that the stock has been trading in. And the longer the parallel channel, the longer the trend line of any type, essentially just two trend lines, a high and a low, go back in time, the stronger they are. Well, this is almost a 100-year chart. This is going back to August of 29, the Great Depression crash. Okay? I mean, this is a very strong and powerful chart, and it tells us that it's very strong and powerful because it has underlying nuances that tell us that this isn't just an anomaly. This is the Great Depression crash. Now this midlines of the parallel act as resistance and support. Here it's acting as resistance. Here it's acting as support. This thing loves to hug the midline. Okay, so that's telling us that this is a good parallel. In addition, we tagged it during the dot-com bubble right here. This is April 2001-ish. 2000, excuse me. This is the big rollover, the dot-com bubble. Now, the dot-com bubble made a double top with the 2008 financial crisis. Okay? But because of the slope, we never got back to the top of the parallel. Anyway, you can see that the midline held support. It broke, but pretty much it was support. Now, what's very interesting to me and very concerning, and I'll highlight this with the five things that I see, the five broader topics here, is literally we were pushing. This is a monthly chart, so each one of these channels is a month. So beginning November 24, right during the election cycle, when the stock market was at its peak, it was pushing up until February 25, where it finally started to roll over. So you could blame the stock market rollover on Trump and the tariffs, but literally this chart was telling us that something was coming, that a rollover was going to happen. In addition, this chart is telling us that this rollover is not over. It's only begun. That what we're seeing right now might in fact be a bear market bounce, and I'll get into that. Now, could we push back up here? Sure, we could. I mean, and I've been trying to warn a lot of people to get especially the baby boomers, to get their money out of the stock market, because I see this rolling over hard, and they were the first ones to have IRAs and 401ks. They own 40% of the stock market. The baby boomers get wiped out here with 10 years, maybe 20 years left for them to live without the retirement. It's going to be very painful. I mean, you're talking about a modest maybe 2.5 to 3% gain to get back up to the top of the parallel. I mean, we're into heavy resistance. Okay, so you do with that as you wish. I hope you make a wise choice. Okay, I don't want to see anybody get wiped out here. I mean, I'm not a financial advisor, so I don't want to tell you what to do with your money. But I would just personally, I would say contact your advisor and just try to go into the most protective plays you can. Okay. Now this is the SPX. I took off the logarithmic. Okay. And all I'm going to do here is I'm just going to draw a simple trend line. connecting these pivots. Boom, boom, boom. So what this is a wedge pattern, an upsloping wedge. Upsloping wedge patterns tend to break to the downside, right? And so a lot of people were saying that we had like a, well, I know that tags there. A lot of people were saying that, anyway, a lot of people were saying, where am I? What am I trying to say? A lot of people were calling this just a V-shaped recovery and thinking that now we're about to go to all new all-time highs. I'm going to make the case why that might not actually happen. That what we saw is a bear cat, a dead cat bounce, a bear market bounce, and that we might end up going a whole lot lower. All right, so just a couple of trend lines I want to put on here real quick. Let's see, I want to do a horizontal ray, kind of connecting this top right where we're at. Boom. Kind of connects, all these tops, and really I can kind of put it right at the very tip there. So at least, no, I want to include that peak there. We'll do right there. Here, in through here, and then we're kind of tagging it today. Okay, so first of all, we're coming up, we break, right? And we broke on Thursday at on the 5th, which I think was the day that Israel started bombing Iran. But anyway, this was already telling us that we were about to break, that some event was coming. Okay. In addition, if I pull back to the daily chart, see this trend line here was resistance, resistance here, and now today. I mean, it should kind of maybe better to go like that. It's more of an art. It's not a science. But anyway, this trend line acted as resistance, pull back, and then today we're trying to get above. Okay? We're trying to get above, but we're being rejected. Could that be a bull trap? A bull trap is when the institutions are literally trying to get you bullish, going off sides, thinking we're going to new all-time highs right before it rolls over. That is my best case. My base case scenario is we are rolling over. Lastly, this resistance line. Support. Broke support. It was support here. Support. Kind of broke support. Regained it. Chopped. Kind of went right through here where we tag. And then today we popped above. But I would suspect we're probably not going to last. Probably come back in. Right? So now where is this market going? I think we're going here. I think we're going to have about a 7% decline from here, right? And then one thing I didn't talk about that I just remembered, if I switch this back to logarithmic and I go to the monthly chart, is when this tags the top, we usually find support at the middle. It might not happen right away, but we end up at the midline, right? That midline drop from where we're at right now would be about a 65% drop and would correspond with the COVID low. So if I get this back off of logarithmic and we look here, I think we're going back to the COVID low. We're not going to go there in one straight shot, but my thesis here is I don't think these wars are going to stop. I think these wars are going to escalate. I think we're already in World War III. I think they continue to escalate, which is really going to shake the markets. Or we have another financial debt crisis because literally we're paying our interest is our number one expenditure in the United States. It's ridiculous. And as I'll show you later, I think the interest rates are only going to go up from here, not down. All right, so best case scenario, hopefully we continue to new all-time highs. We're going to run on the top of that parallel no matter what. Worst case scenario, we just, who knows? Best case, we continue on into infinity, but I just showed you we don't have a lot of upside left. We're probably going to roll down to here right as the wars just continue to escalate. which is ultimately, I think, going to get this market to flush hard. Okay, now Bitcoin. A lot of people are pretty excited about Bitcoin. Looky, another parallel channel. Very interesting, huh? Now, this is a bull flag. We're moving up and we're kind of chopping sideways. But the problem here is if this parallel continues to hold, we don't have a lot of upside left, just like the stock market. I believe this is going to roll over. Okay? The stock market sells hard. I believe we're going to see the bottom of this parallel channel somewhere around $50,000, which would be a great buying opportunity. It would kind of correspond to this pivot here, or even this pivot to this pivot. Somewhere in here, right around $50,000 is where I think Bitcoin is going. Now, the bull case. This is a shoulder, this is a head, and this is another shoulder for an inverse head and shoulders. Okay? That would mean we're actually going to break out of here. If we break out of here, this is a very, very bullish setup. I mean, we're talking about to the top of this parallel channel, we're talking about a $70,000 move-ish, right? So if we come, say we just break out tomorrow, and we go $70,000 up, that's going to put us about 185, 190,000. Call it two. So what I believe is going to happen with Bitcoin, when the markets sell, Bitcoin's going to crash hard. And people are going to think Bitcoin's done, yada, yada, yada. But that through the ashes, maybe some money printing, maybe we finally transition to a blockchain or whatever, this inverse head and shoulders is going to pop hard. And how do we know Bitcoin was going to pop up here anyway? Is see this cup and handle. Bitcoin was, or just even this bull flag, up and chopping sideways like we are right now. I mean, this was telling us a move up was coming. Now this is kind of looking like a move up is coming as well, but if the stock market sells, this is going to come in. It'll first catch support here, boom, boom, and then it could come down. Another thing I just saw is this could also be an M, and then it comes up and forms an A if Bitcoin does not turn into what it's supposed to be. But bullish case up to about 185,000 if it breaks out of this parallel channel. In the near term, I think it's going to come down with the stock market. Cool. U.S. oil. Another thing that leads me to believe that war is coming. U.S. oil has been putting in this wedge pattern. Wedge patterns like this, especially maybe like a flatline wedge, right? Instead of like a vertical wedge. If this was at an angle, it's more likely to drop to the downside. If it was pivoted down, it's more likely to come up. This is just saying we're chopping in here, getting a lot like a coiled spring, getting tighter and tighter and tighter. We did break down before the war escalated because of economic concerns, but then we quickly regained. And now we're chopping in here even more. What I see here, I know that the global economies around the world are contracting. They've been contracting. A lot of the data we get is not very accurate, unfortunately. They're trying to keep this up as much as they can, the stock market and people's optimism, yada, yada, yada. But this is telling me that something's going to happen to oil that's going to send this a lot higher. And I don't know what that's going to be, but something's coming. Something is coming. About a $66 move. So say we broke out tomorrow. $66 is going to take us up to about $140 a barrel. So this is kind of pointing to me that war is coming. The marks don't, the charts don't tell you what's coming, geopolitically or what event, but they're predicting a rise in oil as long as we hold the support line. This is also telling us that it's a good time to buy oil and go long oil, right? And that's exactly how I am positioned. Next, the 10-year yield. Oh, the Fed is just going to lower interest rates and everything's going to be okay. Well, the Fed only controls the overnight rate, right? The lending rate to the banks. They don't control the 10-year yield. When they change interest rates, it's for the banks. And then the banks set their interest rates of what they're going to lend to you. But really, the 10-year yield, and why this is so important, is that the 10-year yield is what our mortgages, our 30-year, our 5-year auto loans, our credit cards, pretty much everything that we use to finance anything is based off of the 10-year yield, and it is not controlled by the Fed. Now, the Fed can do quantitative easing where they step in and buy bonds to make this lower, but this is traded. You have to have people willing to buy U.S. debt for this to go down, right? We have $9 trillion in debt coming up due this year. Who's going to buy it? That's why they're pushing the stablecoin bill, and that's one of my theses for Bitcoin breaking through the parallel, is that after this collapse that I see coming, they're going to transition us into something new, something that's digital. Because the dollar's done, in my opinion. I think its days are numbered. And what this is telling us, since it's a weekly chart, since 81, when interest rates are 15.8%, you hear a lot of people say, oh, interest rates are still low. Historically, yeah, speaking, they are low, right? But when you have $37 trillion of debt and you're financing it based upon these interest rates, no matter what it is, it's going to be high. And this chart, this descending parallel channel, another parallel channel that we have broken out, retested, and now pushed up and are forming, this could be a little bit too slanted here. So this could be an upsloping wedge that breaks to the downside maybe. But what this is really pointing to, this is zero down here, this is really pointing to higher interest rates. We broke out. We might go higher. And where might we go, Corey? If I just do a simple, not that one, excuse me. If I just do a simple Fibonacci retracement down to this COVID low here, the 50% mark, this is not a Fibonacci number, but a 50% move back, which corresponds to this pivot right here, which is interesting, would be 8% interest. 8%. Typically, when you break out, you do at least a 0.618 fib or a 0.786 fib. So you're looking at somewhere, the average is about 10% interest rates. 10%. So the chart is telling us oil's going up. Oil going up is going to make interest rates go up. And the breakdown, literally corresponding to Israel bombing Iran, we're into major resistance. I mean, I literally think that we are heading into a stagflation economy where interest rates are up, oil will be higher because of the war, and we're going to be in war. I think we're already in World War III. I think this continues to escalate. And the charts are kind of showing us that, if you can't see what I'm saying. I mean, the charts tell no lie. It's just, what is the story? And this is the story that I'm presenting. Not financial advice, but it makes a lot of sense to me. Lastly, oh, look, gold. Oh, Corey, parallels. I mean, look, another parallel. Boom, boom. Gold's going to $5,000. When? I mean, if we break out the parallel, which is definitely possible, but right now we're in a major resistance. One thing I want to point out is when the stock market crashes, so here's the .com bubble, when the stock market crashes, gold goes down too. Because people need to sell things. That wasn't the .com, that was December 20th. Was that COVID? June. I think this was the COVID collapse here. But anyway, gold acts as a safe haven play until you get a big move in the stock market, because people get margin called and they have to sell whatever assets they have, right? This recent move in gold has mostly been attributed to central banks around the world buying gold because they know it's coming, in my opinion. They know we're about to roll over hard, and they know that the dollar's pretty much done. Trump's trying to save it, but something big is on the horizon, and I would be very careful. Just buying gold right here is not going to save you. Sure, you'll be able to cash it in case the dollar goes bust, but I would be looking for a much, here, I'll tell you right now. I think this is the 7,500, 2,750 level. I like this level right here. I like a pullback in gold, because typically when the stock market sells, gold could see about a 20% reduction. So that's about 20% from where we're at. I like the 2,750. $2,750 on gold. If it gets down there, buy. That would be financial advice. But another thing we could see that we haven't seen yet, because we broke out of this cup and handle, which I don't know if you can see this, but if you were tracking this chart, you would have known we had a cup and we had a handle. Cup and handles move from the base of the cup up to the top, which is about $1,000. I mean, depending if you go out to the right on where, I mean, it's not an exact science, right? It's more of an art. So if we start here and go about up $1,000, because of the slope, it takes us, we're a little bit higher than that, but cup and handles can go 5 times the distance of the cup. So, I mean, this could be a breakout. I mean, if we pull back, we could rally up out of this parallel channel. Parallel channel is only good till it's not, but so far it's been holding, and it shows that once again, support, resistance, and then we broke through, and literally right here in the midline, it was kind of hard to get above. We came back, and it was resistance and then support again. So this is a good parallel, right? So all I'm trying to tell you is SPX at least going to fill this gap, right? I don't think we might see a new all-time high, but it's into a lot of resistance. I think we're going to get a pullback here by the end of this week. Pullback's coming. That happens, Bitcoin's going to pull back. Bitcoin gets down to about $50,000. I would buy. I might even auction off some of my kids. Buy. Oil. I think oil's a buy. Oil's a buy right now, and I think something's coming that's going to really push oil up. The 10-year. I mean, we can watch this. If this breaks down, great. I would refinance in a heartbeat, right? I would buy a house in a heartbeat. But this is kind of pointing to higher rates. Higher rates. So if you're a buyer on the sideline, I pray for you. I hope this comes down. I hope we get a retest somewhere. Maybe it breaks for a little bit and you can get in. But this is really pointing to higher rates. And higher rates, what does that mean for the housing market? Stock market down, interest rates up, oil up, your house prices are coming down. If you're on the fence about selling because you think interest rates are coming down or whatever the case may be, you might want to sell, right? And if you're a buyer, you're going to wait, but you might, probability suggests you're going to be paying higher interest rates, higher than you think. Everyone thinks it's coming back down here to the zero bound, but it ain't. We have broken out of a multi-85, since 1985, a multi-decade parallel channel we have broken out of, okay? This has been building like a coil for a long time. 40 years-ish, 50 years? 40-ish years, yeah, 40 years. 2020, yeah, 40 years. Boom, okay? Interest rates are going up, oil's going up, stock market down, Bitcoin down, gold down. So what do? I'd be very cautious about bonds right now, right? I don't know. Holding cash and then dumping it into something as soon as we get the correction, probably, right? Something very liquid. 3-month treasury bills or something. And then as soon as we get the correction, you make your move. Yep. Now, I hope you enjoyed that. I didn't want to scare anybody. I'm just trying to give you an overview of what I see happening, okay? And you can kind of see my thesis. It's not like I'm just saying these things are going to happen. I showed you the charts. If you disagree, it's a free country. It's just this is my base case. This is my thesis based upon what I see in the charts. I hope you enjoyed that. And I plan to make more videos like this in the future. Thank you.